So tell us a little bit more about PWC and the Money Tree.
Well, the Money Tree has been going on for a little over 10 years. It's a joint venture between Thomson Financial and the National Venture Capital Association. We use the data from Thomson Financial to track venture capital investing in the U.S. By state as well as by industry, and to track trends of what's going on in investment around the U.S. As well as I represent PWC in the Silicon Valley area to put on events for the Money Tree. We do a quarterly event at different locations to present the latest data, as well as to have 3 or 4 venture capitalists or other service providers that are integral to the early stage process to discuss trends and answer questions from the audience. I think some of the most recent trends are clean tech has emerged as the number 3 category for investing, coming from virtually zero 5 years ago. So there's massive amounts of money that are going into clean tech all over the U.S. Life sciences has emerged to be roughly 30% of the investment total, which is way up from 5 or 10 years ago. Software as a service, or so-called Web 2.0, even some Web 3.0 so-called companies, has continued to be a big trend, and international continues to grow. China and India are the countries that are most in the news, but there is globalization going on in virtually any country around the world that has a reasonable sized population and low wages and high technology training and great universities.
Meaning U.S. investments in those regions.
Yes, either investments in companies in those regions, or just as commonly investments in U.S. companies who then have significant operations, either in operations or R&D or sales and marketing in other countries, either to take advantage of labor arbitrage in the populations or to simply penetrate those markets. In many markets, China and India either are or soon will be bigger markets than the U.S. or Europe. Enterprise software has lost a lot of enthusiasm, particularly with the consolidation of companies. It's very hard to do an IPO in the enterprise software space, which tends to depress the M&A values if you can't go public. Also, there's been so much investment over the last 30 years in enterprise software, it's harder to find white spaces that are available, and the sales process into companies for enterprise software has gotten more cumbersome over the years, and in fact it's very hard to sell directly to large companies. You typically would need to go through a third-party consolidator, which slows down the process, takes away margin, makes it more expensive as a company. So it's very hard to get a new enterprise software company through the venture capital community. I think also telecommunications has gone down. There are fewer telecom players around the world who are actively upgrading their capital equipment. We went through the whole optical morass and the collapse of the telecommunications market, and only some of those carriers have come back strongly with capital equipment. And so many VCs were burned in the telecom collapse of companies that had very exciting technology, couldn't sell anything, had high burn rates, and they just collapsed. In the U.S., Silicon Valley gets about 35% of the investment dollars, so it's by far the biggest area. The 2 other areas that are virtually tied for second are New England, Boston and surrounding communities, as well as Southern California, which I would say is a collection of Los Angeles, Orange County, and San Diego. And both of those regions get around 10 to 13% of the market. So you take those 3 collectively, and you're looking at half, or even a little more than half, of the market right there. There's a bit of a drop off from there, but certainly New York is still a vibrant market, and Washington D.C. are probably the next 2 most popular areas. And those 5 or 4 markets collectively probably get 70% of the venture. One of the reasons that Southern California has really emerged in the last 5 years to rival New England is that the 3 of the industries that are popular in Southern California have been very vibrant and continue to be. One is the digital convergence, converging entertainment and technology. Many of the great media companies are in Southern California. There's a lot of people with media experience, and so that's a natural area. And certainly convergence and digital media has been a very popular sector and will continue to be so. Wireless has been very hot, and Qualcomm is based in Southern California, and there's been a lot of spin-offs out of Qualcomm. And then finally, life sciences has been very hot, and San Diego for quite some time has been a hotbed for life science activity. So Southern California is blessed with a concentration of people and money and technology that really understands three of the most vibrant industries in the money tree survey.
Thank you very much.
Happy to help.